Hello and welcome everyone to this Your Overseas Home webinar, which today will focus on managing your money and your finances when making the move to Portugal. My name is Hannah Armstrong and I'm one of the team here at Your Overseas Home, and you also may have come across us as part of our sister business, Property Guides. Now, as a whole, our businesses have been assisting buyers with their property purchases for around 15 years now. And through this, we do this by offering you advice and resources, connecting you with industry experts, and crucially trying to save you money and avoid any pitfalls and make sure that you enjoy it as much as possible. We're delighted to have you with us today, whether you're listening in live on this slightly grey where I am Saturday morning, or you're catching up with us on demand. And joining me on the panel today, I have two industry experts in the field of finances. So first up, you will hear from Paul Harris of Smart Currency Exchange. And after that, I will introduce you to Robert Webb from Chase Buchanan. So for those of you who are joining us live today, if you've got any questions that you would like to put to Paul or Robert, please do type those in on the right-hand side of your screen in the questions tab. There you will also see a section called polls, and we've got one quick question that we would love to put to the audience today. All your answers on there are confidential, but it will help us tailor some of the questions on today's session. So I will hand over to our panelists now, and first up I'd like to welcome Paul Harris from Smart Currency Exchange. Now, Paul has been helping customers manage their financial transactions and currency exchange for over 10 years now. Smart Currency Exchange and his team are based here in the UK and are on hand to help with any type of financial transaction that you may have. So welcome today, Paul. Can I start by asking you to give us a little bit of background into Smart Currency Exchange and how you and the team can help the listeners today?
Sure, thanks Hannah, and good morning everyone. So yeah, as Hannah said, we're here to help you with the currency transaction and moving money into Portugal to obviously purchase the property and then any potentially ongoing payments that you may have. But first of all, obviously a bit of a background into Smart. So we've been around as a foreign exchange expert for over 15 years now, and we've helped over 40,000 clients in exactly the same position as yourselves to help buy, afford, and actually transact and buy a dream property overseas. We look to offer you a full service. So as I said, we've been around for a long time, and we're largely seen in the industry as the property experts when it comes to currency transactions. So we'll obviously give you a lot of guidance on the exchange rates and how to move the money and potentially when to move the money. But we'll also try and give you a lot of extra sort of tips and guidance in the buying process as well. And if there's anything we can't help you with, we've got a wide partner network that we can certainly link you in with as well, just to make sure that you've got every little bit of help you need when you are purchasing a property overseas.
Brilliant, that's a great intro. Thank you, Paul. Now, I know that Smart Currency Exchange has a variety of different sort of types of transfer that you can offer customers. Can you talk us through the different options, please?
Sure. So we've got a few different options. If you've done some research already, you may have seen two main types of contract are either spot or forward. So spot contract is, for example, you would agree an exchange rate today, pay within a day or two, and we transact and send the funds out straight away for you. So really short-term contract, really quick transaction, agree the price today, and we get that sent out ASAP to Portugal. One product that's incredibly popular with property buyers is a forward contract. Now the difference between the two is a forward contract lets you fix today's exchange rate and pay at a future date. So for example, if you were to be on a viewing trip, on a virtual viewing trip, or actually in Portugal on a viewing trip, and you find your dream property, sign on the dotted line, and you've agreed the price. So that price is agreed in euros. And then where we can help you out is understanding obviously how much that's going to cost in the currency you hold at the moment. Let's say, for example, sterling, so pound sterling. So a forward contract basically agrees today's exchange rate, so you know how much the property is going to cost you in euros. By fixing the forward contract, you also now know how much that's costing you in pounds. But there could be potential up to 3 months between the date you agree your price in euros and the day you actually transact. So the forward contract locks in the exchange rate, so you know how much it's costing you in euros, how much it's costing you in pounds, and there's not going to be any change to that. So it gives you full peace of mind that you've agreed your price on both sides and your budget is protected. Obviously, if we can time that for you, time that well for you as well, could end up being a little bit cheaper than you were expecting. That money could then go towards other services or potential renovation costs as well. So it is a very popular product, takes all the risk of any market movements out, and gives you real peace of mind when you're agreeing an exchange rate. A couple other options that are available, not necessarily set contracts themselves, but they're orders. So we have an order to buy and an order to call. Now the difference between the two is small. So I'll first explain what an order is. So again, you're in the scenario, you've agreed, you've signed on the dotted line today, you know your price in euros, but the exchange rate isn't quite where it needs to be or quite where you want it to be. Perhaps you want it to be pound to be a little bit stronger, which makes obviously the transaction a little bit cheaper for you. We can look at targeting an exchange rate for you. So just picking a number out of the air, not saying this is going to be 100% achievable, but say, for example, currently 120. You want 120, and that's where you want to transact. We can certainly target that for you and put an order into the market. One thing to be really clear on and make sure that you're fully aware of is that just because we have an order in for that amount doesn't mean we're able to get it. So we're always working off the live exchange rate, and it's always going to be whatever the market dictates. So if we can get to that exchange rate, fantastic. If not, we're going to be transacting wherever the market is at the time. So it does come with a little bit of risk. If it doesn't go up to that level and potentially drops further, the property could end up costing more. But that's the sort of added flexibility you get with an order. Now, the difference between the order to call and the order to buy, like I said, is very, very small. So an order to call is exactly what it says. So once that rate is achieved, we'll give you a call. We'll let you know, the rate that you were targeting is now available. Would you like to transact? And in order to buy, you would send the money to us. We hold the funds. So let's say they're sterling. The rate is achieved. We transact the funds immediately for you, and you've got the exchange rate you wanted. But both very popular products again, but they do come with there's no guarantee that we will get up to the exchange rate that you want. So most popular product would certainly be the forward contract, just because it gives you full peace of mind.
Brilliant. That's fantastic advice. Thank you so much, Paul. Now, obviously, a couple of the options that you mentioned there, targeting rates and those forward contracts, obviously, suggest that people need to think about that quite early. How early on in their buying process should customers be thinking about currency?
As soon as you start thinking about the actual process of buying overseas, we would say is the right time to at least have an initial conversation with ourselves. So if you've been online searching on websites for certain types of property, you'll be looking in a certain area, certain property type, number of bedrooms, if it has a swimming pool, for example. Within those searches, there'll always be a price that you'll be looking at as well. So you'll be filtering by price. If that price is in euros, or even if it's in pounds, we can still help you understand how much that's going to cost in pounds if it's a euro price, or how many euros you're going to get for the pounds that you'll be looking to send. So right at the early stages, we can really start working with you, help you understand your budgets, and let you know what's affordable, and keep those, most importantly, keep the costs as low as we possibly can for you.
Brilliant. Thanks, Paul. And for these services, these different types of contracts, and this sort of understanding of the budgeting and understanding of the client's needs, how much are customers paying for that? How do you work out your fees?
So we don't charge fees, and hopefully most of the people that sign up now will have an account with us already. You'll know that it's completely free. And when it comes to the transactions, we don't charge either. So the way that we make our money, obviously we do make money on the transactions, is between the market price, which is, if you Googled, let's use sterling euro for an example, Google the price GBP to EUR, you'll see whatever the rate is at the time. That's the interbank price, or the market price that you'll see, which is where the banks will be trading with each other. So when we book a contract with you, we'll buy the currency from the bank at very close to that. Not even we get that exact rate. And then the rate we offer you will be slightly lower. Really marginally lower, but we make the money between the price that we buy the currency from the bank and the price that we offer for yourself. The price that we offer to you, though, however, is firm. So there's not going to be any fees on top. We don't say there's a transaction fee. We're not going to take a fee. We're not going to take a percentage out of the amount we transfer. We make our money on the actual transaction behind the scenes, basically. We don't speculate with the money, but where we buy and sell at slightly different rates, and that's where we make the money. So it comes at no costs to yourselves.
That's great to hear. Thank you so much for that, Paul. Now, obviously, you mentioned there about buying your currency sort of, from the banks at similar rates to theirs. What would the difference be for a customer in using Smart versus using their bank, or maybe even a sort of payment platform, something like Revolut or something like that? How do all of those different services differ?
So there are subtle differences between the three. So I guess we would be classed as a sort of a full proper brokerage, where you'll be speaking to a person. They'll be able to guide you and offer you varying different products. We start with the bank, and they will only offer you a spot contract. If you're doing it with a cashier, that cashier might not be sort of a specialist in foreign exchange, so they'll just be reading the number off the screen. You won't get any guidance on if that's a good time to try and transact or what the actual clear exchange rate is. The banks will also charge a fee, and the exchange rate they give you will be pretty poor, and it doesn't shape up to anything like what we can offer. Looking at payment platforms, so as you mentioned, Revolut. Again, it's a good company. We're not here to badmouth other companies, but there are big differences between ourselves and, again, the online payment platforms like Revolut. Revolut is an online platform. You don't get to speak to someone. Again, only spot contracts, so you can't fix ahead of time. And again, it's just they'll offer you a price on screen. There's no guidance. It's just whatever the rate is at the time. That's what you're going to get. So yeah, I mean, the banks and Revolut will offer a service, but with someone like us, we'll give you the full package. You'll have someone to speak to. You'll get a bit of guidance, and there are various different products that we can offer throughout the actual currency transaction side and transactions afterwards as well.
Brilliant, thank you so much. And John's asked sort of what is the difference and variance in those rates between what you would offer and what other platforms would?
So if you compare it to a bank, it's the difference is around 3 to 4%, better off with ourselves. With platforms, it varies between the platforms. Sometimes the platforms will be very cheap, and they will offer a good exchange rate. That's not to say that we can't match that at all. We certainly can, and we'll be in the ballpark anyway. But like I said, it's the main difference with us and the platforms is you'll be actually able to speak to someone and actually get that guidance as well. So we'll be able to sort of talk you through the process. But yeah, as far as exchange rates go, certainly much better than the banks. There or thereabouts with the platforms. Sometimes we'll be better, sometimes they'll be better. It's like any industry really. There'll be some businesses sometimes will be more competitive, sometimes we won't. But again, if we're not, there's someone on the end of the phone to speak to, and we can potentially adapt and be more competitive. So yeah, you do get that added benefit there.
Brilliant. That's really good to know, and I hope that answered your question, John. Thank you so much. Now, in terms of, we've been doing this a long time and working with property buyers a long time, as I know Smart have. What happens if a purchase falls through, but somebody has got a contract booked with Smart? What would their options be in that circumstance?
So as you rightly say, we've been working with property buyers for years now, and fully aware that plans will change, plans will get cancelled. There might be a chain that people get stuck in. Plans might get cancelled completely. Might decide that the property you've agreed on actually isn't right for you, and you've found something else. We can be flexible, absolutely. If you've got a contract booked in that you need to cancel, we can certainly do that. If you're still looking at actually transacting at a future date, we can potentially just extend the contract, just make it longer. But if you are looking to fully cancel and you've got a forward contract booked in, for example, the way the forward contract works is, like I said, we agree the price, and that price is fixed. We take a 10% deposit at the start when we put that contract. That's not a fee, and you just pay the 90% remaining balance before the end of the contract. But if we have that 10% deposit and you cancel a contract, if there are any losses when we cancel the contract, that would come out of the 10% deposit. But one thing that we will always be very clear with you is if you are cancelling a contract and there are any losses, we'd have that conversation with you before we just cancel it. We'd say that this may end up coming at a cost of X amount out of the deposit. Are you happy to proceed? If we feel like over the next few weeks that we could potentially let that contract run and those fees could reduce, we'll have that conversation with you as well. Again, not able to guarantee that, but we certainly will try. But if there are ever any losses on contracts, we'd be very clear with you beforehand, and make sure you're comfortable before we fully go through with any cancellations.
Thank you. I hope that answers the customers' questions who asked that. Now, in terms of, we've obviously talked a lot about the property purchase here and about that sort of large scale transaction to actually buy the property. Do you just do those, or do you deal with any other sort of more regular monthly payments?
So yeah, a very common misconception is that we only look at the large transactions and help you with the property purchase. But as I've said a couple of times, we've been working with property buyers for a number of years, and we understand that the buying journey doesn't end when the property is bought. There will be ongoing commitments potentially. If you bought the property as a holiday home, you may have ongoing bills monthly. You may want to look at doing some renovation work to the property. We can help you with all of that. If it's for one product that's incredibly popular with ourselves is a regular payment plan. So a couple of examples I'll give you. If you've bought the property as a holiday home and you have your monthly bills over in Portugal, there'll be a set amount potentially each month that you have to pay: water, gas, electricity, etc. We can again set that contract up as a fixed amount, so as a fixed exchange rate for again 12 to 24 months. And so you'll then, on a standing order basis, send us the pre-agreed amount each month, and we send the exact amount out to Portugal, to your bank account, that will cover for all those bills. The other example I'll give is if you've moving to Portugal, potentially you'll have a pension in the UK. If you're looking to bring that pension over monthly, again, we can do that on a regular payment plan. Or if you have some customers will have potentially loans, or they'll have a mortgage still in the UK that they'll need to pay monthly, and they might be getting an income from Portugal. Again, we can send that monthly over for them, going either way in or out of the country.
Fantastic. That's really helpful, Paul. Thank you so much for that. And my last question before we move on to Robert is just around kind of safety and security. We've talked about Revolut, we've talked about the banks. You know, how does the customer know that their money is safe with Smart?
So when you send any funds to us, they don't go straight into the Smart accounts. They go into a client holding account in your name. So that's held with the banks that we work with. So if in the very unlikely event that anything was to go wrong with Smart from a financial perspective, your money is safeguarded in that client account, because we're not holding against our bank accounts. So if we were to go to essentially go bust while we're holding your funds, all the money would just be returned to the bank account that we'd received the funds from in full. So there's the £85,000 limit for the FCA. That's related to banks. So if we were to be holding your funds and the bank was to go to essentially go bust, then that would be the 85,000 limit would kick in, because it's being held with a bank. But again, both situations very unlikely. My details will be at the end of the presentation. If anyone wants any more specific information about our safe and security information, I can certainly send that over to you. It has our FCA number and HMRC numbers in there as well. We're fully regulated by the two. That's brilliant. Thank you so much for clarifying that, Paul, and I hope that puts everybody's mind at rest. I think that's about all we've got time for on this side of things today. Thanks to everybody who's asked their questions. And as Paul said, it's never too early to be thinking about this and to be taking the advice of the guys over at Smart. You know, even if it's an initial conversation now, but you're not planning to buy for a while, it's fine. You know, have that conversation. So we will share Paul and the team's details at the end of the presentation. But I would now like to move on to our second panelist of the day, who is Robert Webb from Chase Buchanan. Now, Robert is qualified with over 25 years experience in this field, and he can work with clients based in the UK, Europe and Africa.
He specialises in UK and Irish pension transfers, portfolio investments and inheritance planning. So really well positioned today to answer lots of your questions. So I'll now hand over to Robert, who will take you through a presentation, and then we'll go on to your questions after he's finished. So over to you, Robert. Thank you.
Okay, Hannah, thank you very much, and good morning, everybody. I thought I'd start this presentation by just giving you a current update of the situation here in Portugal, because I obviously know it's in the news. But the good news, to start with, the weather. This morning is absolutely fantastic. I'm based in the Algarve. It's about 24 degrees. There's not a cloud in the sky, and it's just wall-to-wall sun. And the rest of the week is exactly the same. So you won't have to worry about umbrellas, rain, drizzle, mizzle, none of that stuff. This is absolutely perfect. The virus, you'll all be aware that Portugal was on the green list and is now on amber. My opinion, for what it's worth, is that that affects the tourists more than individuals who want to come down here with a view to retiring or living here. Now, that's a long-term project. So effectively, one has to weigh up a possible 10-day quarantine back in the UK against the long-term objective. So really not too big a problem. So that's something to consider. The other thing now, just to annoy a lot of people in the UK, the rest of my day, I've already taken my dogs out for a walk. I'm doing this presentation, then I'm off to play some golf with some friends of mine for a couple of hours. Back here for a dip in the pool, and then this evening it's off to our favorite seafood restaurant. And you know, that's a normal weekend day. So that's what Portugal can offer you. That's what's in store for you here. So rather than an amber list or an amber light, as far as I'm concerned, it's green, green, green all the way for you. So having dealt with that, I'm now going to obviously get into the presentation. I'm going to deal with a number of aspects, but effectively visas and then tax and planning, okay? So first and foremost, a little bit about Chase Buchanan. It's very important to know that we are registered in Cyprus for investment purposes under a MiFID license and also an insurance license. That may not mean a lot to people, but to us it's mega. It's an industry-wide regulation and authority, and we have it. The other important bit is we are also registered in the UK. So we've got both feet in both camps. So that obviously, you know, there's an overlap many times, and that's going to help clients for sure. We have various offices located throughout Europe. Mostly we have the office, obviously the head office is in Cyprus, and we have offices in Portugal, Spain, and of course we have our admin in London. Okay, and this is what we offer. We are fully independent financial advisors, and the list of topics, the list of subjects that we cover are basically those that you would find in the UK, with slight difference. So in other words, I deal with Irish pension transfers. So if anybody from Ireland is listening, you know, I can, you know, give you all the relevant advice. We even go as far as dealing with US personnel, but most of it is pension planning, life, investment, very similar to the UK. Now then, this is the first slide I'd like to deal with. For those non-EU nationals considering moving to Portugal. Now, since Brexit, people in the UK are non-EU nationals, okay? So the visa process is split into two. Now, basically, anybody from the UK can come down here for 90 days in a 180-day rolling period throughout the year without requiring a visa. Really important point. So if you want to come down here on holiday, you can stay here for up to 3 months without a problem. The issue will come if you want to come down here permanently. Now, if you do that, you will need a visa. You will need a visa of either the D7 or a golden visa. Now, the D7 visa is basically what I would call the retirement visa. It's available without a problem, and the critical thing is to go to your home consulate. So there's consulates in Manchester and London, and you need to apply there first to get what I call a temporary D7. Okay, it lasts for 4 months, so you can come down here and then obviously you can stay for 4 months, absolutely no problem. And whilst you're here, you would then apply to the immigration department. It's called the SEF, and they would then give you a final D7 visa. Now, to get the D7 visa, you need a minimum income. It's 7,600 euros per individual, 3,800 for the partner. So it's about 11,000 euros. Absolutely no problem at all with that. You will need to provide proof of residence, and you will also need a fiscal number. Now, if you get the D7, you will be able to stay here for 5 years without a problem. You will also get freedom of movement within the EU, should you wish, absolutely no problems. You would also be able to check into the national healthcare system, but you could even get your own private healthcare if you wish. And family reunification. That's quite important, because that will enable parents, grandparents, siblings, children, stuff like that. They would be able to join the D7 visa, okay? It's very important. So it really is quite simple. Now, the next visa is a golden visa, okay? So first thing to remember is you've still got your 90 days visa-free visits into Portugal. If you want the golden visa, probably the most popular way of doing it is via a property purchase. Now, at the moment, this is property in Lisbon, Porto, and Algarve, over 500,000 euros. But that's changing from January, and it's being reduced to 280,000. Okay, and it's basically moving into the rural areas. So the golden visa will not be available thereafter in Lisbon, Porto, or the Algarve. And effectively, by the Algarve, it means the coast. Farther up into the hills, you will still be able to apply and get the visa with a property at 280,000. So exactly the same application process. You need all your personal documents, fiscal number, bank account. The thing about the golden visa is you only need 7 days residence per annum. It is absolutely bizarre. Mostly down here it's 183 days, but the golden visa will allow you to get away with just 7 days residence. That can be quite significant. Again, you've got freedom of movement in the EU. It's valid for 5 years. You can get permanent residence after 5 years. And again, the family reunification issue applies. Now, the one thing I want to make really, really clear here is that this process of getting visas is no different to any other country inside or outside the EU. So if you went to, let's say, Australia or Canada, New Zealand, you would need a visa without a shadow of a doubt. You can't just pitch up and say, look, I want to live here. You've got to have something before you get there. Now, the critical things about this is that, my opinion, for what it's worth, is that you must get an agent to do all this for you, okay? An agent will cover the initial application in the UK for what I call the temporary D7 and help you here with the SEF to get the permanent visa. The reason is Portugal loves bureaucracy. That's the first problem. And the second problem is the language. Things tend to be a little bit slower here. And if you attempt all this on your own, you are going to pull all your hair out and you are going to go round and round in never decreasing circles. So you must get an agent. Okay. We use an agent here with connections all over the Algarve. They're absolutely excellent, and I can put you in touch with them without a problem. It is quite a stressful process, to be honest, because the paperwork is immense and it's slow, so beware. Okay, now, non-habitual residence is a tax status, okay? Bizarre, it's got nothing to do with residence, nothing. It's basically a tax concession that is given if various qualifications are made. And they really are quite simple. To get non-habitual residence, all you need to show is that you haven't lived in Portugal in the last 5 years. Well, that's quite simple. You haven't had NHR status before. That's quite simple. And all you need to do is to show that you've lived in Portugal for 183 days. Absolutely simple. Absolutely no problem at all. All you then need is the usual documentation. You have to register with the tax authorities, show proof of address, fiscal number, so on and so on and so forth. And remember, use the agent on this particular plan. The benefit for you is that the tax status lasts for 10 years, and the concessions it gives you are fantastic. Income tax on pensions is only 10%. Now, UK, for example, is 20% basic for sure. Could be 40, could even be 45. One doesn't know. But here, for 10 years, you're going to have a 10% tax rate for 10 years. Phenomenal, absolutely phenomenal. Equally, no tax on dividends, so any dividends you receive here in Portugal would not be taxed. There's no tax on interest and no tax on royalties. So these are substantial concessions, very favorable. And if one fits the category of NHR, it's a great status to have. Okay, financial planning. Now, one thing that a lot of people may not be aware of is that UK advisors can no longer advise clients or individuals in the EU. It's all because of Brexit. It's what is used to be called passporting. The UK were able to come into Europe and advise. That's all finished. So your existing advisor almost certainly would not, your UK advisor almost certainly would not be able to advise you once you've taken up residence in Portugal. Okay, before you leave the UK, if you've got a pension, take the pension cash before you leave the UK. Quite an important point, because if you take it when you're down here, it'll be taxed. It'll be taxed minimum at the 10%, absolutely. So get it done when you're in the UK. You'll need to complete also what's called a P85, and this will enable all income from the UK to be paid without deduction of tax. It's a very important piece of kit, this, and one that many people just completely overlook. If you have a UK pension and the circumstances are right, one could consider moving it to a new plan. It's called a QROPS, or possibly a SIP transfer. This is a big subject which I'm not going to go into because we'll be here all day, but it's something to consider. ISAs, in the UK, there are tax issues there. And the problem is, in the UK, an ISA is effectively tax-free. Once you move residence into Portugal, it becomes taxable in Portugal, okay? So this is a mindset thing. So you're in the UK tax structure, you're coming out of it into a Portuguese tax structure. And consequently, some of the products, some of the plans that you've got need restructuring as well, okay? Ireland, if you've got Irish pensions, then we can transfer those to another EU-based plan, which is very attractive, very advantageous, possibly significantly better than leaving the plan in Ireland. But again, that's another big topic. But if anybody's interested in it, you know, I'm happy to help. Now, this is a continuation of what I was saying earlier. If you've got lump sums in the UK, or you've got investment bonds in the UK with Standard Life, Viva, whoever it is, whilst they are tax advantageous in the UK, once you move residence to Portugal, they become taxable. So you've really got to kind of start thinking in a different box. So your box A UK for all your products or your plans, you've got to start thinking of box B. Because if you're resident in Portugal, you don't want to be paying tax unnecessarily on products in the UK. Waste of time. So it just needs an adjustment, that's all. The final issue concerns UK inheritance tax. People, again, this is a massive subject, but people think that once they leave the UK, inheritance tax does not affect them. It does not apply to them anymore. That could not be further from the truth. So if you leave the UK and you have an IHT issue, okay, it goes with you. It stays with you. So if you have a potential liability in the UK, you'll still have it exactly the same, even though you're now resident in Portugal. So it's a big area, this, and one that's, you know, sadly overlooked by a lot of people. Okay, and I think that's it. I've covered a heck of a lot of ground there very quickly, but just to recap, it's all about getting your ducks in a row. And the critical thing with regard to visas and registration in Portugal, start it early, get yourself an agent, because it's going to save you a huge amount of time and stress, believe you me. The second part of the presentation concerning, say, the tax and the products, I think my message there is you're in box A in the UK or wherever you are, but now you're going into box B in Portugal, and the rules, the tax rules, legislation are different. So you've got to adjust. You've got to kind of get the structures right. It is a different ball game down here. It's not a disaster. It's easy to overcome, and really, we're here to help. And any advice, any input, we're happy to give it. I think that's it, and a massive thank you for watching, and let's hope everything works out well for potential moves.
Thank you so much, Robert. That was fantastic. A really wonderful introduction there. And as you say, I think we could talk all day and really go into the detail of these topics. We do have some audience questions that I would like to put to you. And I would just stress to the audience, if anybody's asked anything that's sort of particularly based around your personal circumstances or quite detailed, we will refer you directly to Robert afterwards behind the scenes, because, you know, for sort of particular circumstances, it's difficult to address them all on this forum today. But I'd like to start off. We do know that a number of our customers are looking at retirement options in Portugal. So I'd like to ask a couple of questions on that. The first question, really interestingly, has come in from a customer who is an EU citizen with an EU passport, but has earned her living and got her pension in the UK, what would happen in that circumstance? Could she transfer that to an EU pension, as you mentioned, or what would your advice be in that situation?
Sure. A transfer from a UK pension to, let's call it an EU pension, yeah, it's perfectly viable. It all depends on the circumstances. And rather than say, yes, it can be done, although I'm pretty damn sure it can be, the best thing really is just to have a look at it. If it's a standard UK pension, then it can easily transfer to somewhere like Malta into a more tax advantageous regime. Absolutely no problem.
Brilliant, thank you. And you mentioned about taking the tax-free lump sum out of pensions when still in the UK.
Yes.
Simon's asked an interesting question about this. He has said, can you use the non-habitual resident programme to draw more than the 25% tax-free and get that at a lower rate if they go beyond 25%?
No. Right, it gets a bit more complicated, this. If you are resident in the UK, you should take out the 25% cash before you come here, okay? The reason for that is that it's tax-free in the UK. So if you've got 100,000 in your pot, take out the 25,000, tax-free in the UK. Tax-free here, because when you take it, you are not resident in Portugal. So that's the first point. If you then come down here and you take out the 25,000 from the same pot and you've got NHR, you're going to pay 10% on that 25,000, which is £2,500. So if you want to save yourself 10% tax, take the lump sum whilst you're resident in the UK.
Brilliant advice. Thank you so much for that, Robert. That's really helpful. And another question about retirees who are looking to relocate to Portugal but keep a UK property. Will they pay tax on any income rental they get from their UK property? And how would that work?
Yes, it's very, very simple. Normally, one has there is a double taxation agreement between UK and Portugal, and basically that says that the same source of income cannot be taxed twice. Okay, so if you're a resident in Portugal, you can't be taxed on an income in the UK and Portugal. So the double taxation agreement says you are taxed effectively in your country of residence, which is Portugal. Okay. But the big exception to it is property income, okay? It's not covered by DTAs, only from the point of view that, let's put it very simply, if you're UK national and you're resident in Portugal with UK property income, that income is taxed in the UK, always, and not in Portugal. Now, that's the bad news, but the good news is that you still qualify for your personal allowance. So if it's a jointly owned property, there's two personal allowances there. So that's what, £24,000, plus other items you can deduct. So the amount of tax that you'll pay, really, at the end of the day, may not be great, may not even be anything.
Fantastic advice. Thank you so much. That's really helpful, Robert. And just can I ask you to clarify, what are the income tax rates in Portugal? We're quite used to the UK system here, and most of the listeners are UK based. Can you just clarify what those rates are?
Right. Okay. The first thing to say here really is that my opinion, for what it's worth, is that most retirees would get NHR status. Okay, now that would mean what I've said earlier, 10% on pension for 10 years, no tax on dividends, interest or royalties. But if you go to the normal rates, as ever with Portugal, nothing's a straight line, tax, there is a small personal allowance. It's only €4,000, but then the tax starts. It's all banded similar to the UK, but there's a lot more of them, and the tax rates go from 14 up to 48%.
Brilliant, thank you. I hope that answers that question for those who've been asking that. Now, wanted to just talk about savings and investments and things like that. A couple of questions have come in on this. A customer's asked, they've got an ISA in the UK, should they leave it in the UK? Should they move that? And another question, similar question, with premium bonds. Should they keep their UK premium bonds? How does that all work?
Yeah, right, absolutely. Well, the ISA, for sure, that would be taxable in Portugal. A lot there would depend on how much is in the ISA. You know, if you're talking reasonably chunky amounts, then really it should veer towards moving it out into what's called a Portuguese compliant investment bond. Bit of a mouthful, but effectively, you could say it's the equivalent, it's the Portuguese equivalent of an ISA, okay? So UK ISA would be tax-free whilst a resident, but once you move into Portugal, that then becomes taxable. Difficult to say. If it's only a small amount, then it might be not worth the hassle of moving it. It's very difficult to say, but if it's biggish, then yeah, definitely move it into Portuguese compliant bond. Premium bonds, yeah, that's a big problem. My opinion, for what it's worth, is really they are taxable here in Portugal, but it needs a lot of looking at. That's not such an easy subject, that, because of course they are effectively tax-free in the UK, particularly if you win the big one, but they would be taxable here. So you need, a bit of care on that one.
Great, thank you. That's really helpful. And for the customers asking about premium bonds, just to reiterate, we will get you in touch with Robert to talk about those in detail. Sure. Now, you covered visas a lot at the beginning, which is fantastic. Couple of questions have come in about the D7 visa, similar questions actually. Genevieve has asked if you have to be retirement age for the D7 visa, and David has similarly asked a question saying he is working from home at the moment but for a UK company, and he's been advised that a D7 visa for him might be an option when relocating to Portugal. So any advice on those questions?
Very simple, right. You do not have to have, say, retirement age in order to get D7. So UK, say, state retirement age now is, God, 60, 65, 66, 67, who knows? No such thing down here, you can get it. So there's no need to make a retirement age in order to get NHR. Working from home, to get the D7. Working from home to get the D7, also absolutely no problem at all. That happens all the time, so that's easily done.
Brilliant, that's great advice, thank you. And I thought that was going to be far more complicated, so wonderful that was a quick one there. I'm conscious of our time, Robert, and I do want to touch on one last query with you, and that is around inheritance. Now, we're talking here obviously about people purchasing property in Portugal and wanting to relocate, but they are going to be thinking about how do they pass that property on to the next generation in future. Can you just shed any light on Portugal's inheritance laws for us?
Yes, very, very simple. There are none, okay? But the problem is you still remain liable to UK inheritance tax, even though you are resident in Portugal, okay? It's such a big subject, it's massive. And the worst scenario is that you would be subject to inheritance tax on your worldwide assets. So if you live in Portugal and you've got a property in Portugal, that's in the pot. If you've got Portuguese property and property in the UK and Australia, it's all in the pot. Now, just on a very general point here, if, say, husband and wife, partners come down here, it would be safe to say that they would have £1 million, up to £1 million as an estate value before they have to pay inheritance tax. And secondly, that tax would only effectively, if you did it right, would effectively be payable on the second death. Okay? So, if you come down here, you're still liable to inheritance tax. You're liable to inheritance tax on worldwide assets. You could have up to £1 million tax-free of inheritance tax. And fourth, the tax, if you did this right and you structured it properly with wills, so on and so forth, the tax would only be payable on the second death. Okay?
Thank you, Robert. That was a really, really helpful introduction. And thank you for all of the answers you've given today. I'm really conscious of our time, so I'm going to wind up today's session there. But to everybody who's asked questions, you know, with those real sort of detailed, specific personal queries, we've put Robert and Paul's details on screen now, so you can get in contact with them. And we will also send an email out in the early part of next week with a replay link for this session if you want to refresh your memory on anything, relook at the slides, and also confirming these contact details again. The last thing I wanted to just say as well is we'll pop a quick link on the screen now to the Your Overseas Home website. We've got a wealth of resources on there, buying guides, other webinars that you can listen to as well. So do pop in and take a look at those. But lastly, just wanted to say thank you to everybody who joined us, whether you're on demand, listening on demand or watching with us live today. And thank you, a huge thank you to Paul and Robert for the fantastic advice they shared with us today. We wish you all a really, really happy and successful move to Portugal. So thanks all. Bye.
Thanks. Bye-bye. Thanks.